So there are a couple of regulatory instructions which the sector is feeling the heat of. For example, despite Reserve Bank of India's guidance in 2018 to be a small finance bank, there was no response from the sector. But there is an insistence now still that 50% of your portfolio should be a small loan. So let's not go into the technicalities. 50% of the portfolio of gold loan would mean that your growth is automatically curtailed and controlled. How these banks will grow then?
The point is, first you have to identify what is the credit gap in that sector. Is it going to mean 50%? If that 50% is there, then you got an automatic route of succeeding by achieving your target. So if you by yourself are not able to meet that, then who else is chipping in to fulfill that target? So you have to ensure that the level playing field is created by putting a cap on the other person or the other party which is enjoying this part of the freedom to lend to these sectors.
Sir, 2 years ago, this insistence of Reserve Bank of India was converted into such a position where the shortfall was insisted by Reserve Bank of India to be invested into some rural electrification or SIDB bond with a rate of interest of 2%. Bigger banks had to suffer a financial loss, substantial financial loss, or a default penalties.
So you have to create a situation of how much is the gap for me to fulfill my obligation of lending to the small units. See, today there are multiple agencies doing the financing for small businesses. There are the Mudra loans, there are the various guarantees, there are the PM Swanidhi Yojana loans for street vendors and all. So if you aggregate all these efforts together, what is the share of cake which I get? So I must either have a tie-up to any of these schemes, or I must be told this is the target. So for that, what you need to do is ensure that you are a part of the lead bank scheme and become a part of the district lending plan.
सर ये तो होता ही नहीं है हमको अर्बन कोऑपरेटिव बैंक्स को मुद्रा लोन देने की कोई परमिशन नहीं है.
No, you have to fight it with the government to get it.
Yeah, that is true. I mean, here we talk of the small loans, and here the level playing field doesn't exist.
No, that's what you have to project it in a way that artificially you are being denied the permission to lend. The barriers created are artificial, not natural.
नहीं अभी there is one more serious issue. At the drop of the hat, Reserve Bank of India is penalizing the urban cooperative banks. There was a period when Reserve Bank of India almost some 50 banks in a year were penalized for divergence in asset classification. Now that reason has gone down. This is a substantial improvement. But still, whether the object of levying penalty is achieved, because now the levying of penalty has become a matter of routine, and urban cooperative banks don't feel a pinch of it. They are just not bothered. Karo, penalty karna hai, karo.
Not this one. The problem is not just the urban cooperative banks, almost all the banks which have committed something serious wrong. Right now, the prime area is the KYC.
Yeah.
For which maximum banks are being penalized, not just urban cooperative banks.
Even commercial banks.
So I have represented to RBI through some other forum that why the bank should pay the penalty. Because when a bank pays the penalty, ultimately the money is going away from depositors. So why not the penalty be recovered from the wrongdoer? That is still under consideration. Because the public sector banks are terribly opposed to that idea.
Okay.
Because what is the wrong thing done by the bank? It is the person who has done the wrong.
Yeah.
So if he is penalized, he or she will never dare do it again.
Yeah.
So it's not just that the penalties are at the drop of a hat. There is a process. There is a committee within the RBI which looks at the issues.
So that's what the banks are saying, that
No. It is not at the drop of a hat. It is always
number and quantum of such that
if they look at the RBI website, there are more public sector banks and commercial banks which have also been penalized, and more heavier penalties than what have been imposed on urban cooperative banks.
Can we not request the Reserve Bank of India, apart from enforcement department, there has to be an independent authority for appealing against the penalty?
There is an appeal process within the system.
But that appeal process really doesn't work in favor of the urban cooperative.
No. See, it's working in favor on. The point is whether I have been granted a fair hearing. That should be your concern. Whether outcome is in your favor is not the issue.
सर वो hearing होता है, सुन के लेते हैं, बाकी कुछ नहीं होता है सर.
नहीं, so let the outcome be there, then you convince, okay, this was the point that we had made, this is what you had said. Next time around, if for the same reason the penalties come, you can always contradict the RBI saying this is what you had said last time.
There is one more thing that is happening. I mean, you talked in the last Sunday's show also uh, that the things in CBS are changing, and in fact, the ongoing NPAs are also required to be identified, and the provisioning are also required to be identified through system is what you talked about. What is happening is that of these 1400 banks, there are almost over 200 software vendors who have provided CBS, each of its own liking. So forget about whether it is CMM 5 level, CMM 7 level, forget about it. The point is, you take a software, I don't want to name the software because it will not be proper. None of these softwares are generating the online NPS accurately. And then there is always a human intervention. Without human intervention, NPA identification accurately can never be done. With that being the story of several software, the question of provisioning does not arise. अबे capex कौन करेगा sir?
Sir, here I'll tell you. The question is very simple. One is you have to properly define what is the user acceptance testing involved. Before you accept the solution, what is the user acceptance test you have prescribed? If that test gives out the results that you are looking for, then only you will accept the software. Now, a person who has spent crores of rupees investing in it, if it doesn't give the outcome that he or she has asked for, what's the use of buying that system? So, same thing applies to the service provider. If he or she is charging crores and if he or she is not able to deliver what you have asked for, he or she can be easily denied the payment. So, the solution lies in properly defining the user acceptance standards. So that user acceptance standard can be a sensitivity analysis or can be a back testing. It can be both. So you decide, like if I have asked for this system, this should be the outcome. Does it give that? You cannot prima facie accept get it inaugurated by chief minister and then say it is not generating. No. On day one, you test the system for what you have asked and what it is giving. If on day one he says, you can ask him to pack the bags, take the system back with him.
Sir, I was just talking about the safe where and there was there are rather certain banks which were under SAP for certain number of years. Now they are migrated to the prompt corrective action. Little back reference on that. I mean, with PCA coming in to foray, do you believe that the PCA is a time bomb process and if the bank doesn't improve, it will exit the scenario? I mean, how is the story?
See, the point is, let me tell you very simply. If under SF you had a given time horizon, try to collate the same in terms of what would happen if the PCA were there. Either SF is there on that day or PCA were on that day. So you have to take the terminal date for achievement of the targets for you to come into the business norms prescribed by the RBI. I don't see any major challenge there. Only you have to tell under SF would have been able to do this by 2027, whereas under PCA you are asking us to do it by 2026. So kindly grant us one more year. That will be the logical outcome of the exercise.
So one more thing that the banks are facing, but banks are unable to talk with is the Bank of India, and the banks call it as a end of day syndrome. Normally, what is happening is this: since there are several Reserve Bank of India people who are also subscribers to this channel, uh, they should look at this question typically. You have urban cooperative banks where system is not 100% correct, accurate. There are several things which are not on system. CBS is CBS, it's only a transactional platform, but not a data analysis platform. Reserve Bank of India calls for a data which requires human intervention and compilation, and there is always insistence that by end of the day the statement should be given, and there is no time limit which is given. नहीं दिया तो virtually that you are taken to task. Now, my question is, why there is no system of calling for information repeatedly of same nature, repeatedly on the information which is already submitted, and can there be a liberal time frame for the simple reason why the banks are armed to state to submit the information which they cannot generate or collate with the chances of giving inaccurate data to the Bank of India. Can there be some kind of system where अगर बैंकों से डेटा मंगाना है इंफॉर्मेशन मंगाना है उनको 48 घंटा दो यहाँ पे 12 बजे 1 बजे मेल आता है इंस्ट्रक्शन होता है 4:30 बजे तक आना चाहिए. They are terrified. The MIS departments of bigger banks are terrified, petrified, absolutely. And there is no one who can talk on this.
See, end of the day is not a new thing. If the system is there, the system clocks and dates will automatically change at midnight, irrespective of the geography, whatever geography you are in. So, if you don't achieve the end of the day, the system will achieve the end of the day. If you don't do it end of the day, the system will achieve, strike a trial balance, give it to you. Are you willing to handle that? Does it tell you the story as you wanted to see it, or does it tell a story which is more music to the ears of the RBI? So end of the day will always be there. See, like even in the human intervention or the human operations led workforce that we were there, end of the day was always there. And why was the overtime a big burden? Because everyone was sitting there with a vested interest of achieving the end of the day. So if the RBI was saying, if you are feeling so petrified, if you are so sure that your system will generate no wrong data,
That's not happening.
No, I'm saying if you give a direct connect to RBI to your database,
There is no issue.
if you give it directly to them, now whatever is the aberration or whatever are the inconsistencies, as they want it or as you give it. The problem is for the regulator to have uniformity and consistency in the data.
Sir, we'll
in the same form.
Sir,
okay.
We'll make the show of 1 hour because.
Yeah. Okay.
Yeah.
So if you want consistency and accuracy in the data, you need to have a consistent, like if you have offsite surveillance returns.
Yeah.
Coming, they are uniform for everyone.
No, that's not an issue. It's not the regulatory returns I'm talking about.
No, any return, any information which the RBI calls for. What it tells us, this is my requirement. How you get it in terms of individual banks is your outlook. But if you give it in terms of the individual databases of banks, it may not come in the exact. So where is the time and the resources with the RBI to make it compatible to a single denomination factor?
No, the issue which normally banks are therefore facing in this area is that suppose the bank is not in a position to submit it in time, it enters into the area of regulatory discomfort that affects the entire bank because bank has a genuine problem of extracting data.
Correct. So the point is two things. One is the speed at which your data extraction happens. Second is the gap between the transaction happening and the recording of the transaction it is generating the database. So if your empirical studies tell you that it is 2 hours, you can always tell the RBI by this time it will be ready and it will reach you by this time. So there should be no problem. See, because what happens is if the regulator department has told you they want it by 4:30, it means they have promised somebody else that it will be on the governor's table or the finance minister's table by 6:30. So there's a timeline commitment which continues that way. It doesn't fall something from the heaven. The parliament question is there.
Yeah, that is true.
So the parliament question, the committee which sends out the questions from the Minister of Finance, it says your total answer, including the notes, background paper notes, should reach us by 10:30. Then your 10:30 is not the time you are going to give to banks. You are going to give the time of 5:30 because after you get all the data from banks, you need to collect it and bring it into a common understandable form. So that's what causes the delay on the part of and the pressure.
So recently, virtually with the amendment of Banking Regulation Act 2020, with substantial power of Reserve Bank of India, there has been a lot of talk by the central government as well as by the Home Minister himself that the urban cooperative banks would be brought on the regulation of commercial banks. That was the idea. जो भी कमर्शियल बैंकों का रेगुलेशन है वो अर्बन कोऑपरेटिव बैंक्स को लाया जाएगा. तो इसमें गड़बड़ क्या हो रहा है? देयर आर एटलीस्ट 6 to 7 रिजर्व बैंक ऑफ इंडिया सर्कुलर्स issued to all regulated entities. Okay, all regulated entities would include NBFC, would include commercial bank, would include urban cooperative banks. Now, what is happening here is that these circulars are making some back references which were issued to the commercial banks. Urban cooperative banks were not subjected to that. The urban cooperative banks are virtually high and dry how to react. The classic example is that of a technical write-off, prudential write-off, the circular which
One
was
rupee.
which was issued to urban cooperative banks last year. There were references of 2020 circular which were issued only to the commercial bank. Urban cooperative bank को मालूम ही नहीं है.
See, it's very easy to tackle this. Can you write to RBI in a polite way, saying we assume that everything that is applicable to commercial bank is in toto applicable to us? What about transfer of shares?
Right.
What about listing of shares?
Right.
What about transfers of shares at book value? Why then only small banking, small finance norms for us?
Why the private sector lending norms?
No. So post these counters, na. Then they'll come out and say, because the point is the people there also have not known how the sectors have grown. There is a gap. There's a knowledge gap, there's a legacy gap. So somebody who has grown with the urban cooperative bank sector right from 1966, he or she would know how the sector has grown. Somebody who has joined the RBI in 1995, he or she would hardly know why a particular regulation was issued only to commercial banks and not to cooperative banks. It is easier for the corporation, union cooperative minister to say that, but he's more saying it with a view to incentivize the urban cooperative banks to bring them on par with the corporate governance standards. Does he seriously mean it? Can he do it himself? At the most, he can request RBI. Then the RBI would know where the shoe pinches.
Shaktikanta Das last year took 4 such conferences where he himself was present and he had called the chairmen and CEOs of big banks.
I know of those outcomes, but what has happened after those conferences? What have you got as a concrete outcome of that?
Nothing measurable.
Nothing quantifiable.
Nothing quantifiable. Sir, there is one out of stock question which has been bothering me. We have a Reserve Bank of India which has been doing inspection in a particular method where they have migrated to the risk assessment report. Instead of the camel rating, they have gone for risk assessment. That's a big change. What is your experience of inspection in other countries? Have you seen?
There's no comparison with other countries for the simple reason no country can boast of the diversity and the number of bank branches or number of banks that we have. First thing, so there's no comparison. Secondly, all other countries, they talk of cost of supervision and cost of regulation. In India, we don't talk of that. Tomorrow, if the Reserve Bank says you'll have to pay so much to RBI for inspecting and supervising your bank, are you there? Are you game for that? Because you're already paying audit fees, you are paying concurrent auditors, you are paying internal auditors. So let's not be too much worried. See, Atulji, let me tell you, if you are thinking of becoming the third largest economy in the world, the RBI, the government, right now the only person who is seriously thinking of that is perhaps the Prime Minister and occasionally Finance Minister. But does anyone in the RBI think that he or she is from the central bank of the third largest economy in the world? What will be your mental makeup? You will be more humble, more humane, but you will be iron fist in its gloves.
Yeah.
So the RBI has also to learn the fact that they are going to the central bank of the third biggest economy in the world. Nobody in the world, not just the regulated entities in RBI in the Indian context, nobody in the world can take them lightly. They have to take their words for their worth in gold. So that kind of an attitudinal change has to come about in all the stakeholders, not just the regulated entities. When the RBI must realize that it is the central bank of the third. So why you worry about Basel II, Basel? There can be, tomorrow somebody can say, why Basel? Because Basel has a historical background, why it came about. Because at wartime, the Bank of England governor, the Bundesbank governor, and the Bank of France governor could reach this place by train in 4 hours. And that's why this place was chosen, Basel. And it was a clearing and settlement bank to start with. Suddenly, after 1980, Japanese bank problems, the Basel Committee on Banking Supervision got added to it. The Payment and Settlement System Activity got added to it. The Financial Stability Institute got added to it. So enough of Basel here. Come on, tomorrow you can say, why not a Mumbai Committee on Banking Supervision? Why not a India Committee on Banking Supervision? So we should not be afraid of having our own say in our interest. And even Basel Committee on Banking Supervision norms and all, it clearly says the national regulators are free to change these guidelines according to their convenience and their requirements. How far we have done it? Whether we have done it at all? So whether it is SEBI, whether it is RBI, whether it is IRDA, we should be able to stand up and proudly say we are the financial sector regulators of the third largest economy in the world.
Correct.
Full stop.
This is rather good. Let's wait for me. Parliament. The Reserve Bank of India has been indirectly suggesting that the urban cooperative banks must start doing risk management practices. They started with compliance management, appointment of chief compliance officer for T3 and T4 banks. For T1 and T2, they have not insisted for compliance officer, but for risk management, they have been talking across all the forums that you must have a risk management system. Now, my question is the commercial banks themselves do not have properly developed a risk management system. How on earth the urban cooperative banks will be able to develop and deploy the risk management system?
See, this is similar to the audit committee of the board,
Yeah.
which doesn't have the CEO and the chairman. So the idea is to have an arm's length approach to issues that are critical. Now, risk is the direct outcome of reward. So your profitability and your risk go together. So when you say risk management practices, it's nothing new. It's only trying to put a different label to an entity which must be not concerned with the operational aspects of risk taking.
Okay.
So if I am a risk manager, I'll tell you this is the risk you are taking. This is not acceptable to the organization. This is beyond the risk appetite of the organization. See, earlier you are the risk manager in the sense, if you decided not to grant a loan, why you decided not to grant a loan? Because internally you are convinced that recovery is going to be a problem. You are a risk manager. Today, when the volumes have increased, so the risk taking and risk management must become two independent activities. So the major changes that are there, risk control unit, any exposure which is being taken, first must get the clearance of risk control unit in terms of this risk is acceptable to us. Because when you take risk, what are you committing? You are committing capital. So when you are committing capital, you are committing the shareholders' hard-earned money. So can you just commit it like that? So if there is a risk control unit that is in place, which gives you the clearance, this is the risk acceptable to the organization or falls within the risk appetite of the organization. To that extent, risk taking becomes more professional.
Yeah.
That's the only idea behind that. Nothing new in it.
So there is one operational issue which has been bugging the urban cooperative banks for almost last 4 or 5 years, and there are no solutions around. BRX practically provides that 51% of the board members should have experience in 10 different fields. They have specified in which areas they should have experience. They are not insisted for a qualification certificate, accountancy, law, industry, agriculture, this and that. All those areas are there. The difficulty the banks are facing is that they have to ensure that in each election, 51% of the members of the board should have that experience. Typically, here, whether it is a state cooperative bank or a multi-state cooperative bank, the returning officer conducts the election as per the election rules prescribed in respective act.
RCS.
RCS is not bothered about the BR Act. Now here, a CEO or the chairman of the cooperative bank cannot decide that the 51% of my board will have this specified qualification as per BR Act 10, section 10. How they are going to comply? This is point number one. They will never be able to comply. Point number two is that once the election happens, the returning officer conducts the election of the chairman and vice chairman then and there itself. Here is a provision in BR Act which says that you have to get approval for the appointment of a chairman. Where is the time gap, time period?
Okay.
So these two issues were
Okay. So now I'll tell you how the RBI has tried to tackle these issues. In the first case, if you remember correctly, way back towards the beginning of 2001 and 2, we introduced the concept of professional directors, co-opting two professional directors. But when that also did not work, we introduced the concept of board of management. Why that was done? That was basically done to fill in the gap created by this particular anomaly.
Mhm.
Now, if you have 10 people contesting the elections, and out of which 7 people fulfill the norms that are prescribed under the Act, where is the question of the returning officer not?
No, that's not an issue. That
No,
becomes an
So
accident, sir.
the only thing is, going forward, that will become the norm.
Mhm.
Going forward, because earlier when we discussed, we said if you rotate one third of the directors by changing principle of having a rotation policy, automatically same thing can be applied here also. So, because most of the cooperative, very well run cooperative, I know your bank or your organization also, no elections were held. Almost the boards were elected unopposed.
Yeah.
So when that kind of a situation is there,
There it is possible to do it.
it is easier to do it.
Easier to do it.
So when you prescribe these conditions as a part of the eligibility for people to become directors, automatically you are filtering out the people who are not eligible.
Sir, here
That their being members is first thing. They have to members of the organization is the
that
first
is true,
thing.
that is true.
But apart from members, they have to fulfill these criteria, educational qualifications.
51% of your board should have these.
At least 3 or 4 if you make out of that, then you can represent to RBI that it may not be possible for us to get all the 10 fields covered in one go. So what we are
Has
doing,
been reported to Reserve Bank of India by Federation.
let the federation take it up. Let the federation take it up. So the point is, if the fit and proper criteria are given by the RBI, have all the commercial banks fulfilled the fit and proper criteria for all the directors? This is a counter which you must pose. And the problem there here, Atulji, is once you become a director on the board of a bank, any bank, you cannot become a director elsewhere. That's why people are a bit reluctant to come to banks' boards. That is true of any bank. If you are a director on the board of a bank, you foreclose all the options of being a director on any other business entity. So, who would like to forego that privilege?
That is true. So there is one issue which has been bugging in entire sector for quite a number of years. There were inspection ratings done by the inspecting officer and were communicated to the chairman and the board of directors. It was supposed to be remain or kept confidential, not even to be disclosed to the annual general body meeting. Now there are risk ratings that have been designed and developed. What the banks are saying is that we should get to know how the inspecting officer has arrived at this particular rating and what is the assessment done so that the scope of improvement the banks will be able to decide. The rating methodology is not known. Nobody
See,
knows.
even the earlier camel rating, did you know how it was?
No, there were several questions which
Questions
we
were
need to
there.
answer.
So, did you know the algorithm, how it was functioning
No,
behind that?
it was
Same thing here also. So, point is, if there is a risk rating, if is a way given to you, where you need to improve, you know it very well. So, why you want the RBI to tell you need to improve here? Because if the only distinguishing factor is whether you are entering the PCA zone or not entering the PCA zone. Even if you are not entering the PCA zone, you could still find scope for improvement. Because there could be a borderline case which has saved you. It can be a very simple thing like capital adequacy, or it can be a simple thing like gross NPAs. You may have missed the PCA just by 0.01%. So how I need to tighten it up? So the entire framework is in front of you. So you shouldn't expect the RBI to tell you, you know it best, you know how to improve yourself. See, if they tell you nuts and bolts, if you only focus on those areas, you are neglecting the general management of the bank.
overall other areas.
You shouldn't neglect the overall general management of the bank. You should focus on that. See, because everywhere, if you look at Basel or if you look at any other What is the single cornerstone? Supervisory oversight and board oversight. So for whatever board does, there has to be board oversight for all the activities done by a bank. And that board oversight is what the supervisory oversight looks at. Where is the time for the RBI to look at individual things? They'll all go by what is readily available. They'll go by concurrent audit report. They will go by as audit report. They'll go by statutory audit reports. They'll go by the minutes of the board. So where is the independent time for RBI to do its own evaluation? It's based all with you. All the inputs are with you.
You know the areas where you have to
See,
improve.
if concurrent audit is there, let me give simple. If concurrent audit is there, if you find that there are 10 areas, 10 irregularities which are recurring, then the concurrent audit framework requires that those 10 should be classified as major irregularities. So you know it very well. Why you want to RBI to tell you?
Do you believe that the new ministry at the center will be able to do any justice to the urban cooperative banks? Because urban cooperative banks is the minuscule of overall the. Bola.
Atulji, the question is highly political. Why this ministry suddenly has come up at the center? So look at the context. And cooperation was always in the concurrent list, but there was never a cooperation minister at the center. This has been basically done, I think, to ring fence the high value multi-state cooperative societies like Amul, Kripco, NAFED, and IFCO. Because irrespective of whatever party comes into power into the states, there will be no fiddling with these institutions which are of the high value kind. I think that is the reason why this particular ministry has been formed at the center to protect the interest of the government of India, not so much the interest of the concerned state. Then no state government interferes with the performance of these entities.
Okay. So you don't think UCBs will get
Nothing. UCB will not get anything.
okay?
Because it will be amounting to like again dual control. Same argument will come RBI and central government. So as far as the banking is concerned, central government has already made it clear everything rests with RBI. So they will not allow it to be seen as a dual control measure by the central government.
So there is one more question about that BR Act amendment where the tenure of the directors has been restricted to 10 years. The question is how you will build the second generation of directors in such an event?
You have to get them elected first, and personally I feel you should first co-opt them onto the board of management and then migrate them to the board.
Okay.
So that they know how is the functioning of the bank and the board.
So BOM
happening.
should be the stepping stone to be a director.
BOM should be the stepping stone.
Okay. With substantial regulatory tightening, do you see UCB's growth declining? What should be done to regain the growth apart from the inorganic growth like mergers and acquisitions?
I think UCB should continue to focus on trust factor, which was their core value. Okay. And they should focus more on raising deposits of good quality. They should not worry too much about advances. They'll take care. So once you have deposits with you, which are of a sizable nature, then the regulator also will be forced to open his or her eyes and see as to how to allow you to deploy the funds.
Okay.
So you should focus on niche products on the deposit side. Don't worry too much about the asset side.
Okay.
That will take care of itself.
There is one more area where under all the chairman, directors, top executive officers of the bank have been defined as public servant. Now, when you define them as a public servant, do you feel that the vested interests of the powers that be in the sector would be checked, or should they be exposed to the guidelines of CBC or something like that?
No. See, this definition of the public servant is more with a view to bring them on a compliance route for the RTI Act. Not so much with a view, because the CBC guidelines are not applicable to private sector. Only RBI has said you should have a vigilance machinery. It has not told like this grade will be there.
Unless you take equity from the government, RTI is not normally applicable.
But here what was happening, through the RBI, most of the RTI related queries were being asked to the RCS. Now that becomes a cost burden on the government. So why not allow them to be defined as public servants? So that whatever information is about that cooperative, you have the right to say no. Then the applicant can give notice to the concerned person and say, this is the information required, I am going to furnish it. If you have any objection, please say
Please
so.
say so. Correct. What would be your advice for the young bankers in the country? How they should make careers in banking, especially the urban cooperative banking?
I think for general purpose sake, let's say knowledge and domain knowledge building is going to be the core area. You should focus on developing domain knowledge, and secondly, you should focus on your analytical abilities to understand risk, to measure risk, and to manage risk. Because today, what I feel is, unfortunately, the banking, the way it has been taken, in the direction it has been taken, is more in terms of risk aversion rather than risk taking. Banking is basically a risk taking activity. And if you are a risk taker, you will anyway, any day succeed as a banker.
So we come to the end of questions which I wanted to ask Shri.D.G.Kale sir. I believe this has been an absolutely enriching experience like me, and I'm sharing this experience with you through his vlog, and this podcast will enable you to understand the sector better. We will again invite him. He has come on our channel after 4 years. It was back in 2021, I believe. He was there on our channel, where our channel was not that big. Now it has grown up, and there are several subscribers, I mean several viewers who are not subscribers but they're watching this channel. My request will be to subscribe to this channel. We'll be bringing lot more such talented people on our channel to give them their first hand exposure of the sector and what is needed to be done. Kale sir, बहुत बहुत धन्यवाद.
सबको धन्यवाद, बधाई हो और शुभकामनाएं. आप लोग डरिए मत, हिचकिचाइए मत, बिल्कुल निष्ठा से अपना काम करते रहिए, लोग आपके साथ रहेंगे.
Thank you so much. Thank you so much.
Thank you sir.
Thank you so much.
4 वाजले.
हे काढा रेकॉर्ड करायचं.
एडिट मध्ये जायचं.
मी उडवणारच एडिट मध्ये.
क्लोज टू 4 o'clock.
या अवी माझा पण आवाज आहे. जय हिंद. बंद करते. मी कट करीन ते म्हणा.